The big concern is that at some point, actually, the populists turn into wanting to get Italy out of the euro. Right? Is this a 30% possibility? Is this a 50% possibility?
I think in the next 12 months, it's very low. I would say less than 10%. But if you look at the next 3 to 5 years, if you don't have that growth and those reforms that attract investment, then you'll get to a point where you'll need to tax people more. And if you have a populist government in place which blames everything they can't do on Europe or the ECB or the Eurozone, then it is possible that this potential populist government may blame the euro for their failure. We've seen a typical pattern of governments that make very strong promises with unsustainable policies. At some point, selling people a dream. In this case, it's flat taxes, universal basic income, and still without increasing government debt, right? So that's the dream they've been selling people. If this dream is not sustainable, we've seen these governments in other countries, blaming external enemies. It could be the euro, it could be the ECB. They've already been doing it. So it's possible that in 3-4 years' time, if you have the same government in place, they may blame the euro and they may advertise a referendum on the euro.
Themos, the last 3 days have seen a big bear flattening in BTPs. Where do we go next? We're at 3%, circa 3% on a 10. Kind of give us some numbers as to where you think that's going. You chuckle.
The trickiest question today. No, look, typically the curve would bear flat, and when you have redenomination risk, or even when you have people thinking about default risk, that's the way it plays. And whenever these episodes happen, and they will happen again.
Yeah, it feels like a pre-shock today,
yes.
Just a kind of warning signal.
It's a warning signal as to how volatile and sensitive the market is with these things. And to be fair, we have recommended investors in our fresh sort of update of our trade recommendations to hedge for this risk for the next 3 to 6 months, particularly through German asset swaps. So I think it is a risk which is still worth hedging, even at today's levels, even for the next few months. The main question and the main point of discussion with my former colleague and friend is whether this is a structural issue or a tactical issue, whether this is an issue mainly for the next 3 to 6 months, or whether it's an issue for the next 5 years.
And the answer is, briefly?
Briefly, I think that we still face it more of an issue, a tactical issue, rather than something that changes the outlook.